apparently, according to many analysts, 2016 was the year when all of the swans turned black, as the only way most could make sense of the markets and events such as Brexit, which in my opinion is just an excuse for being wrong. The Dow flirted with 20k this week, hitting a high of 19,966 points, literally within a few points of claiming the historic 20k level along its relentless bull market path. If one looks back at not just the start of this year, but well, right up until after the US polls closed on November 8th and even beyond, then it's not just a case of Dow 20k could never happen, but that the Dow should by now be trading at well below 15k, whilst a few of the perma crowd had completely flipped out of their minds, imagining the Dow could trade down to as low as 6k. I suppose that's where the Dow needs to trade for some guys and gals just to break even after year of bearish rhetoric. Whilst my consistent view all year is that the Dow would trade to a series of new all-time highs during the second half of 2016, and that ultimately the Dow targeted a trend to 20k, which my analysis of 14th November concluded could occur before the end of this year. So see my videos for a taste of this year's analysis, and with plenty more in my articles archive. Now, I know you all want me to promptly trundle out my forecast conclusion for the Dow for 2017. However, I think now is a good time to remind my readers and viewers that my forecast conclusions are the sum of all of my analysis. For if I just relied on technical analysis, then honestly, I would likely only be marginally more accurate than most of the newsletter and trading service peddlers out there. Which is why I don't pander to a subscriber base, because I know technical analysis is a red herring. Look, TA is highly convincing, highly seductive, but on its own it's not going to let anyone arrive at that which is the most probable, as it's highly subjective. It's very easy to make TA fit a point of view, even if one tries hard not to do that. So I don't approach forecasts from a technical analysis point of view, rather that tends to be my last step. So there are three key elements to arriving at that which is the most probable, which I have often voiced over the years, especially when I've gone off on the deep end on one of my tangents, for as far as that train of thought takes me down, whilst readers prompt me that they just want a forecast of where the Dow or XYZ market is likely to go, rather than reams and reams of text and videos on, for instance, Brexit. Firstly, there are the megatrends. For if I don't understand the megatrends, then I might as well just go and play pin the tail on the donkey. For no matter how good my technical analysis, it won't be better than a coin toss. Which is why I obsess over the megatrends, such as inflation, debt, machine intelligence, climate change and geopolitics. Secondly, I put my money where my mouth is. For me to arrive at a probable conclusion, then I need to actually want to seek to commit my own funds to that market at the outset. If I do analysis on a market where I never intended to invest, then unless it's a very related market, i.e. precious metals or different country stock markets, then I'm not going to have that extra edge, that extra incentive to really want to know what that market is going to do. And thirdly, technical analysis. This is my last step. I don't even want to think about the charts until I work through the above steps. And since I don't pander to a paid subscriber base, I do tend to go silent on markets from time to time until I see an unfolding opportunity to profit from. Now again, unlike the vast majority of analysts out there, I am skeptical of technical analysis. You never hear me pumping up this or that tool. In fact, I'm usually saying it's best a coin toss on its own. There is no black box, proprietary indicators or holy grail that works. Those that tell you such are bullshitting you. Technical analysis is just that, a skill at using technical tools. It's like driving a car is a technical skill. However, without knowing where you're going, then you're just going to get lost, which is what apparently happens to most analysts. They get lost in technical analysis. Yes, it all looks and sounds very convincing, but they could have saved themselves a hell of a lot of time by just flipping a coin. I know, because I've tested it. A coin toss versus technical analysis results in a similar outcomes, and that's for someone who deems themselves as being very experienced at TA. So you can well understand why most analysts fail to even beat a coin toss. So in advance of my Dow stock market forecast for 2017, which likely most of you are anticipating, I will once more be meandering down a megatrend lane, which is Trump's coming war on China. Ensure you're subscribed to my always free newsletter at the Market Oracle site to get this megatrend analysis shortly in your email inbox, as well as this YouTube channel for that and the stock and other market detailed trend analysis and forecasts that are to follow.